All right, guys, another central bank in trouble. This time it's Japan. Over the last 4 days, not one person was buying Japanese bonds. Absolutely no trades. Why is that? Because at the rate of return on the 10-year bond, the yield return is less than inflation. So best case, you invest in a Japanese bond and you lose a little. Worst case, the bond market completely collapses, which is most likely going to be the outcome, and you lose everything. And this is the direct result of central banks printing more money than they make. Japan's bond market sets records for no trades. Japanese bond market sets records for no trade. Trading of benchmark 10-year bonds dries up for 4 straight sessions as the central bank keeps tight control over the yields. Tokyo Bond trades the Bank of Japan, thanks for nothing. For 4 straight sessions, none of the latest issuers of the 10-year Japanese government bonds traded on Wednesday. According to the Japanese Bond Trading Co., it was the largest streak since March of 1999 when comparable data became available. The responsibility for making a normally large market wither away into nothing belongs to the Bank of Japan, which on days such as these is offering a higher price for the 10-year bond than any private firm is willing to pay. That means trading between financial institutions, the kind tracked by the market data firm, dries up. Since March of 2021, the Bank of Japan has capped the yields on the 10-year bond at 0.25%. In April this year, it pledged to buy as many bonds as needed every business day to enforce the cap. In other words, promising to pay a higher price so that the yields, which move in the opposite direction of price, stay low. So what that means is that the Japanese government, the central banks are willing to pay more and buy these bonds at a higher rate than the market gives value to. And to quote Joe Brown from Heresy Financial, the iPhone 14 just came out. I have the 13. So say the market value that everybody's selling the iPhone 13 for is $200. Then say Apple comes out and says, you know what? We want to make sure that that iPhone 13 still holds value. We're going to give you $500 for it. So anybody that wants to sell their iPhone 13, we're going to give you $500, even though on the open market, it's only selling for $200. What do you think would happen? Everybody that owns an iPhone 13 would be like, sweet, I can sell that thing for $500, boom, and they'd start selling it, right? So what's actually happening and taking place in Japan? Unlike the United States, people save money in Japan. So for the last 20 years, Japan has really been printing a lot more currency than any other country. And this is what I think led central banks to believe that they could print infinite amount of money and inflation wouldn't go up because Japan was printing way more money than any other country, but inflation wasn't going up. Why is that? Because people in Japan were actually saving. They were saving their money. They were paying off debt. They weren't going and spending all of that money. So as Japan was printing more money, inflation just wasn't going up. So Japan started to print more money. So then when 2020 and the pandemic hit, every other country thought that they could print unlimited amounts of money. But when they printed it, their citizens went out and spent it because that's what they told us to do, which sent inflation through the roof in almost every country. Now Japan's running into the same issues. Everybody in Japan paid off all that debt. And now what they're doing is they're trying to offload and get out of the yen because it's losing value so fast. So now all of these people that were once saving yen are now trying to get rid of it at an alarming rate. And this is why I say that Bitcoin is going to take the bond market. Bitcoin is going to be the global reserve asset. So at some point, central banks are most likely going to start putting Bitcoin on their balance sheet. And when they do, you won't be able to afford it. I won't be able to afford it. We'll be buying a few Satoshis for thousands of dollars. Let's keep going. Low interest rates in return support the perennially sluggish Japanese economy by easing the way for home buyers and business owners, according to the Bank of Japan. Lifting the cap will clearly disturb the effects of monetary easing, so I am not thinking of doing so, said Governor so-and-so in late September. With the Federal Reserve aggressively raising interest rates, market forces in Japan have been pushing up yields on government bonds this week. The yields on the 30-year bond rose by 0.04 percentage points on Wednesday to 1.475 in relatively normal trading, but the Bank of Japan's cap on the 10-year bond yield left buyers and sellers out of bonds with little to do. The most obvious effect of Japan's central bank policies is a sharp fall in the yen because the whittling interest rates divergence between the US dollar and Japanese yen. The Fed's actions have sent yields on the 10-year treasury to nearly 4%. The latest issuance of the 10-year Japanese government bond, when it last traded on October 5th, was yielding 0.245%. The high yield makes dollar-denominated assets more attractive. On Wednesday, the dollar rose to more than 146 yen, making another 24-year low for the Japanese currency after a year of steady falls. So again, now, what is happening? People that are holding yen are now immediately trying to get rid of their yen and accumulate either dollars or some type of other asset that's not going to depreciate as fast in value. Most likely, the US dollar will be the last fiat currency to collapse on a global scale because of the demand for the US dollar and how many central banks use it as a store of value. But that doesn't mean that it's not going to collapse. And the faster and the more you can educate people about getting their wealth out of the fiat system and getting it into a nice hard asset like Bitcoin could be the difference between poverty and generational wealth. The weak yen rises the price of imported fuel and food, hitting the pocketbook of ordinary Japanese, although it is yet to lead to the kind of rapid and broad-based price increases seen in the US and parts of Europe. Many global central banks have followed the Fed in raising interest rates to tackle inflation and keep their currencies from falling. Australia's central banks, one of the few to join Japan in setting a bond yield cap, abandoned that policy earlier this year. Again, what did we just see happen in Australia? Australia's central banks are defaulting. They lost, $37 billion in the last couple months? The European bond market was collapsing. So what did England have to do? They had to reverse course on quantitative tightening, and they now announced unlimited quantitative easing. So if you guys aren't picking up what you're reading in the news, what the mainstream media is trying to tell you is happening, what these central banks want you to believe is happening is drastically different than what's actually happening. Pension plans, Social Security, government spending, all is about to get wiped off the map. In my personal opinion, I'm not a financial advisor. None of this is fact. Everything that you see, hear, or read on this channel should be taken for entertainment and educational purposes only. This stuff is so far above my head, but I know one thing. I don't trust central bankers, I don't trust governments, and I don't trust the mainstream media to provide me with accurate, honest information. These are the same governments and organizations that have been discrediting Bitcoin and doing everything in their power to make you believe that Bitcoin is not a store of value, that is not a good investment, that is not going to protect you in inflationary environments, which I think they are so wrong. Japan actually is importing more than they're exporting. So when they import something like fuel, they're paying for that fuel in dollars. So what they have to do is they have to print yen, they have to buy dollars, and then they have to go pay for that fuel. So there's a strong demand for dollars because Japan's having to buy dollars. Every country is, Turkey, Venezuela, right? All having to buy dollars so they can actually pay for items that they import. So it creates this vicious flywheel of these governments having to print more money to buy assets, which deflates their currency even more. And every time that they have to import one more item and pay for it in dollars, it weakens that currency. Japan's central banks have stuck to its easy stance on interest rates and kept buying government bonds. As of Monday, the Bank of Japan owned more than 547 trillion in government bonds, equivalent to 3.7 trillion, an increase of more than 20 trillion in just half a year since March 31st. What that means is that nobody wants to invest in Japanese government bonds. They don't believe in the rate of return and they don't believe in the risk because it doesn't make sense. Why would I invest in an asset like a bond that's going to bring me in, say, 5% or 4.4% return on investment over the next 10 years, when inflation over the next 1 year is at 8 or 10%? And that's the CPI number. That's not the real rate of inflation. So I'm going to lose a little at best, or worst case, complete collapse of the bond market, and I'm going to lose everything if they default. So at the rate that these governments are having to print currency, right? And if they all started to print and buy Bitcoin, could you imagine how fast the price of Bitcoin is going to go up when one G7 country defaults on their bond market and is forced to allocate a percentage of their wealth to Bitcoin? Man. Some overseas traders tried betting against the Bank of Japan earlier this year, believing it would eventually have to follow the Fed's lead. Governor Kuroda has steadfastly said that he won't, and he repeated his pledge to stick to monetary easing at an event Wednesday in Washington, D.C. Analysts said that his statement had quieted those trades. The fact that the speculation over the BOJ's policy shift have calmed down is one reason behind no trading in 10-year bonds. A strategist at Mitsubishi UFJ Morgan Stanley Securities, referring to the Japanese government bonds, she said market players now generally believe that central banks wouldn't change its policy at least until Mr. Kuroda's term expires next spring. So do me a favor, guys, if you guys could help me share this content out to as many people as humanly possible. We need to do everything that we can to teach people about Bitcoin and preserving their wealth, because the wealthiest people in the world, the most powerful governments, the most powerful central bankers in the world are going to be doing everything they can to discredit Bitcoin and convince you that everything's all right, because at the end of the day, they're not going to lose everything. They've already preserved their wealth. They've already printed infinite amounts of money. They own real estate. They own assets. They own Bitcoin. They own things that are going to generate them wealth no matter what. But They lose their power when their control over the money printer ends. So they're going to do everything in their power to keep that control. And that's why it's so important for you to protect your wealth and preserve your wealth for your kids. It's not about us anymore. It's about our kids, doing what's best for our kids, because if we don't hold the people accountable who have put us into this position today, our kids will be paying for it in the future. Again, my name is Ryan Mehta. Thank you guys.